All right, let's dive into a topic that, on the surface, sounds about as exciting as watching a spreadsheet update. An international equity ETF. But I promise you, if you stick with me, there's a really compelling and maybe even profitable story hiding behind that boring name.
Yeah, I can practically hear you from here. And you know what? You're not wrong to be a little skeptical. The source material for this whole explainer actually kicked off with that exact line because they knew what they were up against.
I know, but trust me, there's a really good reason we're talking about this. We're looking at an investment that has this funny habit of quietly winning the race while all the flashy stuff gets the headlines. It's the classic tortoise and the hare story, but for your portfolio.
So let me introduce you to VMYM. It's not the loud, popular kid in class promising a trip to the moon. Nope. VMY is more like that quiet kid in the back row who, 20 years later, you find out quietly bought up half the real estate in town while everyone else was busy chasing fads.
So, what's the secret sauce here? Well, it all starts with a simple, kind of powerful idea: the genuine beauty of being boring. Just think about it for a second. What are some of the most reliable things in your life? Seatbelts. They are profoundly boring, right? But they also, save your life.
And dental floss. Ugh, so boring. But it's the thing that keeps your teeth from falling out of your head. Pretty important. And how about stable, healthy relationships? Compared to all the drama and fireworks, they can seem kind of boring, but they're also what keeps you grounded and sane.
You see the pattern here, right? In life, and definitely in finance, boring is what keeps you safe, it keeps you healthy, and, most importantly for us today, it's what gets you those sweet, sweet compounding returns over the long haul. VYMI is boring in all the best ways.
Now, a huge reason something like VMI even needs to exist is to solve a really common trap for investors, especially in the US. It's called home country bias. It's this deep-down belief that the American market is the only one that really matters. And this slide just nails a key cultural difference. See, in the US, some of these high-growth companies act like paying a dividend is a sign of defeat, like they've run out of ideas. But in a lot of other developed countries, a consistent dividend isn't just nice to have. It's seen as proof of a healthy, stable, disciplined business. It's just part of their DNA. And that difference in dividend culture, that's exactly where VYMI gets its edge. So let's pull back the curtain and look at its secret weapons.
Okay, first and foremost, the valuation. The bunch of stocks you find inside VMI are, to put it simply, cheap. And in the world of investing, cheap doesn't mean low quality, it means underappreciated.
I just love this line from the source material. It perfectly captures the feeling. When you compare it to the sometimes sky-high prices of US megastocks, VMI's portfolio just feels sane. And why is it so cheap? A lot of it is just because these markets don't get all the hype, so investors can be a little slow to see the value right in front of them.
All right, next up is the big one. The main reason most people even give this ETF a look in the first place, the yield. That beautiful cash flow that just shows up in your account.
And this chart just says it all, doesn't it? The yield you get from VMI is typically way healthier than what you'd find in a similar US fund. This isn't some kind of magic trick. It's a direct result of that dividend-first culture we were just talking about. These are companies that actually make paying their shareholders a priority.
And finally, the best part. This fantastic yield isn't coming from some sketchy, unstable companies. VMYI is all about international blue chips. These are the grown-ups in the global economy. They make things, they sell things, and they tend to avoid the kind of drama that makes for bad headlines. It's solid performance, without the heart attack.
Okay, I get it. International investing sounds cool in theory, but what about all the scary stuff? Let's take a minute and talk about the monsters that might be hiding under the bed.
Yep, these are the two biggest fears people usually have. What happens when currencies go wild? And what about dealing with foreign taxes? It sounds like a nightmare, right? Let's tackle them.
So here's the reality. Yes, currency risk is a real thing, but it's a two-way street. Sometimes it'll hurt your returns, and other times it'll actually help them. Over the long haul, it tends to be a wash. And taxes? While some foreign governments do take a little piece, most U.S. investors can just claim a foreign tax credit which lowers their U.S. tax bill. It's a bit of paperwork for sure, but it's totally manageable, not a deal breaker.
So with all of that on the table, who is an investment like VYMI actually for? And, maybe just as important, who should probably steer clear?
This is your kind of thing if you value stability more than you value hype. It's for you if you want a solid yield that isn't coming from some sketchy, high-risk bet.
And crucially, it's for you if you get that there are amazing companies all over the world, not just within the US borders.
Now, on the flip side, if you're trying to get rich by next Tuesday, this is not the investment for you. If your idea of diversification is just owning 2 different American tech giants, you should probably look elsewhere. And if the normal ups and downs of global markets are going to keep you up at night, yeah, it's best to take a pass.
So, to wrap this all up, the promise of VMI is actually pretty simple. It pulls together 4 things that investors are always looking for, but you can rarely find all in one package. You start with a base of high-quality companies, you get them at a cheap, attractive valuation, which in turn sets you up for potentially good long-term returns, all while it pays you a fat, healthy dividend yield along the way.
And that leaves us with this one last thought. International value investing. It might not be the most fashionable thing right now. It's not what everyone's talking about at cocktail parties, but unfashionable is not the same thing as unprofitable. In fact, if you look back at history, it's often in these forgotten, unfashionable corners of the market where real, lasting wealth is quietly built.